It's the hottest financial product on the market today because it grows your money all tax-free with no stock market risk and it's liquid. But the key is it must be properly structured for that to be true. My name is Amanda Ryba. I have been a financial coach and consultant for the last 8 years, and the highest and most requested product on the market today is Index Universal Life Policies, IULs, and I specialize in them. And this is a question I get all the time. How do I know if my IUL is properly structured? What does that even mean? Let's dive in. In order for me to know if your IUL is properly structured, here are the 5 things that I need to know about you. First, what's your age? Second, what's your health rating or how is your health? Third, how much money are you looking to save per month or per year into your policy? Fourth, what's the death benefit or the life insurance amount that they quoted you? And fifth, what is your goal for your IUL? How are you looking to structure it? Now, there are 3 ways that you can structure your IUL. First, for what we call immediate access to cash or infinite banking. Second would be more like tax-free retirement. And third would be for life insurance, long-term care, and the living benefit feature. Now, I'm not going to dive into that in this video. If you want to learn more about it, check out the link video in the description below that I filmed a few weeks ago to find those details out. I'm going to explain all of this to you through a story. So last year I got an inquiry from a gentleman who had just recently gotten approved for his IUL, but he felt a little off about it. He wasn't 100% confident it was properly structured. He felt like the agent was a little pushy. She wasn't really answering his questions, and he just wanted a second opinion before he signed the final documents. So he sent everything over to me, and he gave me the details that I just mentioned to you I would need to know. He was a male, 38 years old, healthy non-smoker, looking to save $1,000 a month, and the agent quoted him a $1 million death benefit on that policy, and his goal was relatively quick access to cash. I wouldn't say true infinite banking, but he did want to get access to cash relatively pretty quickly. And as soon as he told me all those details, I immediately knew that the policy was not properly structured. I knew that he was getting way too much life insurance for the goal of that policy to be immediate access to cash. So I re-quoted him a new policy, and for the sake of this video, we're going to dive into it so that we can explain a little bit more about what to look for when getting these quotes. Here we go. Here you'll see this was an actual illustration that I prepared based on what the gentleman had shared with me about his quote. So this shows a male, 38 years old, preferred non-tobacco just means healthy non-smoker. Specified amount is how much life insurance he was quoted, so $1 million in life insurance. That life insurance was also made available to him for a long-term care need, which just means he can get access to that death benefit if he were to get really sick or injured. It's a really nice feature. And then his goal was just to save $1,000 a month. And that's it. So let's dive in to see how we can tell if this was a good policy or not. So first thing that's easy to take a look at here is, again, we're going to see annualized premium, which is just showing $1,000 a month, $12,000 a year. If we shoot all the way over to the right-hand side, these 4 columns on the right are what are actually going to show him earning some interest inside his policy. So accumulated value, that is your cash. That is how much money is growing inside your policy, or essentially that savings account that's attached to your plan. The surrender value is how much money you have access to withdraw, take out, or loan to yourself. So first indicator is you're going to see a couple zeros here. This guy's goal was immediate or relatively pretty quick access to cash. That's not good, seeing a few zeros there. And then you're going to notice, of course, the death benefit is increasing over time because the accumulated value gets added to that 1 million. So if he were to pass away, his family would collect both the accumulated value plus the death benefit tax-free. And then this shows that $1 million is available for long-term care. But the next section you want to zoom in on is the illustration snapshot. This is going to show you everything that you would want to know about this policy. So again, a $1 million face amount. Initial scheduled premium is $1,000. Here is your main indicator. You're going to see guideline annual. You're going to see 7-pay. Guideline annual premium, $50,000 a year. 7-pay premium, $66,900 a year. What that means is this gentleman could put in a max of $66,940 in the first 5 to 7 years to reach that 7-pay. And then starting in that 7th year and on, his maximum is going to get reduced to $50,384 a year. So when I was talking to this gentleman on the phone, I said to him, could you ever see yourself saving $66,000 a year into your policy? And he immediately said, No, and at least not right now, right? Potentially at some point, maybe very far down in the future, but not right now. Okay. Indicator number 1, this was not correctly designed. Indicator number 2 is this number where it shows target premium, $13,566. How I explain this to clients is that is the number that the insurance company is expecting to receive from the client annually if the goal is for this policy to grow cash value. It is also the number that the insurance agent will get compensated based off of. So the way it works in our industry is we usually get compensated on either the monthly premium times 12, which would be 12,000, or the target premium, whichever number is lower. So in this case, what I'm noticing is this policy was written at what we call full target. It's actually essentially over targeted, meaning that the target number is higher than that monthly premium times 12. So what that means is more money is going towards the cost of the policy and less money is going towards the cost of insurance. Your agent is getting a higher commission. Now, did she initially structure this? I would like to give this agent the benefit of the doubt and think that maybe she was just not properly trained on how to structure these accounts, but this would mean that she would get a pretty nice commission. So that being said, what I had quoted to this gentleman in return for this was, what if we look at reducing the face amount? Because this face amount, this initial death benefit, this controls everything. If we increase this, all these numbers go up. If we decrease this, all these numbers will go down. So let's take a look at that. Okay, this is what I quoted for this gentleman in place of the original policy that he received. Same exact thing. The only difference we're looking at here is a $250,000 death benefit with his $1,000 a month going in. You'll notice that the long-term care also goes down because that's going to be the same amount as his death benefit. But now let's dive in and take a look at this. So if we zoom in, again, you're going to notice $1,000 a month, right? That's still happening. Take a look at this. Surrender value, he has immediate access to cash in year 1, $5,033. By years 2 and 3, by year 3 in the previous policy, he only had access to $5,000 in cash. In this policy, he has access to $27,000 in that 3rd year. So he was a real estate investor. That could definitely help him put money on the down payment of a new house. And if we zoom into the illustration snapshot in this lower left corner, you'll notice face amount went down, scheduled premium staying the same. Take a look at the target. Drastically reduced down to $3,900. Take a look at the 7-pay, drastically reduced down to $16,700. And take a look at the guideline annual premium. It's perfect, $12,700 a year, which means that this client will be max funding this policy from the very beginning, right? He's contributing $12,000 a year, which is basically max funding it based on the guideline annual premium number. So this policy is much more properly structured to meet this client's goals. Everything aligns with what he's looking to do. He has immediate access to cash relatively pretty quickly. And when I compared and contrasted the numbers with him, he was much, much more excited about having access to cash in that first year versus having to wait 3 years to get access to anything. Hopefully this gives you an idea on how your IUL should be structured to meet your goals. Again, there's a lot of different ways that we can do this. Your agent needs to know, how do you want that IUL to be set up? What is your goal for that policy? So if you missed it, please go back and check out the link video in the description below. That will tell you more about the 3 different ways you can structure your IUL. That is the most important part. We have to know what your goals are first before we can do a good job for you. So if you learned something today, please comment it below so that other people can see some of the big golden nuggets and takeaways from this video. If you or a friend are looking into this product, please share this with anybody else that you can think of that can benefit from this information. And if you recently received a quote for an IUL, or you recently got approved for one, or you recently accepted one, and you would like a second opinion, you'd like somebody, myself or my team, to review that, you can click the link in my bio and then select the option for a complimentary review of your IUL, and we'll do a deep dive with you and see if there's anything that we could do to make it better. So I hope you gained a lot of value from today. Again, my name is Amanda Ryba, and it is my goal to illuminate to the world what the wealthy do with their money. And wealthy people love things that grow tax-free and are liquid, hence why IULs have gotten so popular. If you like this video and you'd like to see more just like it, I release a new video every single week. Give it a thumbs up, subscribe to my channel, and click the bell to turn on notifications so you get notified when the next one is released. I look forward to seeing you all next week.